How Jeff Bezos really became a billionaire, step-by-step analysis. Jeff Bezos didn't become a billionaire because he got lucky, won the lottery, or stumbled into some magic idea. He followed a series of very specific steps, and most people only know the headline: he founded Amazon. Today, we're going to break down, step by step, how Jeff Bezos really became a billionaire, and what that process would look like if you tried to follow it today. Welcome back to Make Money with Panda. In this video, we're doing a deep dive into the wealth story behind one of the richest people on earth, Jeff Bezos. We'll go beyond the simple, he started Amazon, version and look at the key decisions he made, how Amazon actually created his fortune, why his wealth exploded decades after he started, and what lessons an everyday investor in the US, UK, or Canada can realistically take from his journey. This isn't a fan video or a hate video, it's a financial analysis. Let's start at the beginning. Building the foundation, education and early career. Before Amazon, there was no garage, no bookstore, no billionaire. Jeff Bezos was born in 1964, studied electrical engineering and computer science at Princeton, and graduated in the mid-1980s. After college he didn't jump straight into entrepreneurship. Instead, he spent years on Wall Street working for firms involved in banking, technology, and quantitative finance. Eventually, he became a senior vice president at hedge fund D.E. Shaw in New York, and he was still only in his early 30s. Why does this matter? He learned how money flows at the highest levels. He understood capital, risk, and how investors think. He saw the power of compounding and scale up close. Step 1 of his billionaire journey wasn't Amazon. It was skills, network, and insight gained from the world of finance. Spotting the asymmetric opportunity, the internet boom. In the early 1990s, something huge was happening in the background, the internet was exploding. Bezos came across a statistic: internet usage was growing at roughly 2,000% per year. Most people saw that and thought, interesting. Bezos saw that and thought, this is once in a lifetime. He made what he later called a regret minimization decision. He asked himself, when I'm 80 years old, will I regret not trying to build something on the internet? That question pushed him to leave his high-paying Wall Street job to start an online business. Notice something important here: he didn't chase any random idea. He looked for a massive trend where even a small slice could become huge. That trend was the shift of commerce onto the internet. Starting small, thinking huge, Amazon as an online bookstore. In 1994, Bezos drove across the US to Seattle and started Amazon in a garage, initially as an online bookstore. Why books? Huge catalog, millions of titles. Easy to ship. Standardized product. From day one, the goal was much bigger than books. But books were the perfect entry point. He used his savings and money from family and friends to get started. In the beginning, Bezos and his small team packed and shipped orders themselves. They reinvested everything back into the business, they focused on growth over short-term profit. Here's the key billionaire move. He structured the company so that he owned a large equity stake. Jeff wasn't trying to become rich through a salary. He was building wealth through ownership. Going public and becoming a millionaire, IPO phase. By 1997, Amazon had grown fast enough to go public. The company listed its shares on the Nasdaq. Early investors and Bezos himself became paper millionaires almost overnight. But here's what most people miss: going public didn't make him a billionaire. It made him a millionaire with a large, volatile stake in a risky internet company. In the late 1990s tech boom, Amazon's stock price soared, and by 1999, Jeff Bezos officially became a billionaire on paper. And then the dot-com crash hit. Amazon's stock collapsed. Bezos's net worth dropped dramatically. Many thought Amazon would fail. But here's the crucial part: he did not cash out and walk away. He held on. That decision, staying invested through chaos, is one of the most important steps in his billionaire story. From online bookstore to everything store, scaling the empire. Surviving the crash forced Amazon to do something vital, become a real business, not just a hype stock. Over the 2000s, Amazon expanded from books into CDs, DVDs, electronics, clothing, and more. Built a world-class logistics network. Focused obsessively on low prices, fast delivery, and customer experience. Every time Amazon entered a new category, it unlocked new revenue streams, and the market slowly realized that this was more than just an online bookstore. Meanwhile, Bezos kept a large stake in the company. As Amazon's market value grew, his net worth grew with it. He didn't need multiple companies or hundreds of different investments. He needed one giant flywheel constantly spinning faster, and he owned a big chunk of that flywheel. The secret engine, AWS and exponential growth. There's another chapter in this story that many casual observers miss: Amazon Web Services, AWS. In the mid-2000s, Amazon started offering cloud computing services, renting out its server and infrastructure capacity to other businesses. What began as an internal tool became one of the most profitable tech businesses in history. AWS turned Amazon from a low-margin retailer into a high-margin tech powerhouse. Generated massive free cash flow. Justified a much higher valuation for Amazon overall. As investors recognized the power of AWS, Amazon's stock price surged. Bezos didn't suddenly work more hours. His wealth soared because the value of his ownership in a rapidly scaling, highly profitable engine exploded. Compounding, patience, and staying in the game. By the 2010s, Amazon had become a dominant retailer, a leader in cloud computing and a growing player in streaming, advertising, and logistics. Bezos's net worth crossed tens of billions, then over $100 billion, making him one of the richest people in modern history. But when you zoom out, the pattern is simple: he owned a big piece of a company. That company kept reinvesting profits into growth. The market rewarded that growth with a higher and higher share price. He didn't panic sell during crashes. This is compounding at a gigantic scale. The formula wasn't get rich quick. It was get rich very large over decades. What can a normal person learn from this? Most of us will never be Jeff Bezos. We're not starting the next Amazon. But there are very real lessons for everyday investors. 1. Skills before bets. Bezos built skills and insight in finance and tech before betting big. 2. Ride big trends, not fads. He didn't invent the internet, he built on top of a massive, obvious wave. 3. Ownership matters more than salary. Equity in a growing business is where life-changing wealth comes from. 4. Survive the crashes. His wealth could have vanished if he'd panicked during the dot-com collapse. 5. Let compounding work over decades. The biggest jumps in his net worth happened long after Amazon was founded. For a normal investor, this can translate into owning shares of great businesses or broad index ETFs, investing consistently, holding for the long term instead of chasing quick wins. You don't need to be Bezos, but you can borrow his mindset. Summary. So, how did Jeff Bezos really become a billionaire? Not by accident. He built rare skills in finance and tech, spotted a massive long-term trend early, took a huge career risk to build Amazon, structured his wealth around ownership, not income, survived brutal market crashes, turned Amazon into a diversified empire, especially through AWS, and let compounding do the heavy lifting over nearly 3 decades. In other words, his fortune is the result of one giant, long, high-conviction bet, executed with discipline. If this step-by-step breakdown of Jeff Bezos' billionaire journey helped you see wealth differently, do 3 quick things for me. 1. Hit like so this video reaches more people. 2. Click subscribe and turn on the bell so you don't miss our next deep dive. 3. Comment below, if you had to make one high-conviction bet in your life, what would it be? Thanks for watching Make Money with Panda. Stay smart, stay informed, and I'll see you in the next one.